Gary Black, our prospective fund managing partner, is here. It's fantastic to have you, Gary. When we last spoke, you were complaining about how much time Mr. Musk was spending on Twitter. To a certain sense, you were encouraging him to get over that. It seems that he hasn't yet. As I mentioned earlier, he is seeking a new CEO. He is still without one. Even if he continues to spend a lot of time on Twitter, the Tesla stock has had an incredible rise. Tesla is still incredibly inexpensive. No other megacap road stocks are selling at my number 40 times earnings, and that's not going to change. They have 30 to 35% volume growth. Every adoption experiences it, as you can see. Take California, where the percentage is currently 17%. In China, it is 22%. And the greatest way to capitalize on this growing EV adoption trend is with Tesla. Tesla has released its first quarter delivery data for the year, and like the Troy test, it appears to have been in line with expectations before this research. Gary Black made a few forecasts, which Tesla intriguingly topped because it outperformed the analysis estimates. Better results in the upcoming quarters are realistic and responsible to expect, but how can Tesla get there? Watch how Tesla does in these markets. Hi everyone, happy to be back at Tesla tomorrow. Deliveries by Tesla have reached new heights in a number of markets, most notably China, Norway, and the US. Nearly 4 out of every 5 new cars registered in Norway last year were electric cars, according to reports. Approximately 138,265 brand new electric vehicles were sold in the nation, accounting for 79.3% of all passenger vehicle sales. With a 12.2% market share at the moment, Tesla was at the top of the list. Globally, Tesla is the leader in EV adoption, having the largest percentage of new EV buyers. In contrast to the United States, where EV sales accounted for just 2% of new car sales, over 50% of all automobile sales in the past few months have been zero-emission vehicles, increasing from 1.2% in 2018 and 42.4% in 2019, similar to Norway. Sales data published by the China Passenger Car Association in February indicates that Tesla is also doing well in the Chinese market. In China, the Tesla Model I emerged as the top-selling SUV. In China, Tesla sold 25,279 models overall. This figure was sufficient to make the Model Y the best-selling SUV overall, including ICE vehicles in addition to making it the most popular electric SUV. What is the performance of Tesla in its other markets? Let's find out. But before we get started, please remember to hit the like button, subscribe to the channel, and enable notifications if you enjoy this kind of video so you can stay updated on all things Tesla. According to recent reports, Tesla's sales in China were nothing short of amazing, and the Model Y's victory over cars with starting prices lower than EVs is a key indicator that the Model Y will outsell ICE vehicles worldwide in terms of sales. Elon Musk, the CEO of Tesla, is planning a trip to China as early as April and is hoping to meet with the country's premier. After the US, China is Tesla's second biggest market, and the company makes electric vehicles in its Shanghai facility. Musk's rumored trip would coincide with escalating diplomatic tensions between the United States and China, as Maker is the major production base. Occasionally, the millionaire has inadvertently become embroiled in this dispute. Securing this market is of utmost importance because China is home to Tesla's largest manufacturing site and its largest market outside of the United States for electric vehicles. With 491,000 cars sold in the US, Tesla has also been a major player in the market. Tesla overtook BMW as the top in U.S. luxury sales in 2022, after the latter had held the title for the previous 3 years. With 286,764 cars sold, BMW was forced to settle for second position. In 2022, Mercedes-Benz ranked third, with a total sales volume of 258,704 automobiles, followed by Lexus. Not only did Tesla surpass these names, but it also made history by being the first American carmaker to be ranked number 1 in 25 years. It is anticipated that sales of Tesla units would increase in the U.S. The combined revenue of all automakers is anticipated to reach $20.69 billion in 2023. Additionally, an annual growth rate of 3.97 is anticipated, which would translate into a predicted market volume of $19 billion by 2027. There is a single, compelling reason to give Tesla credit. The company supports American automaking by building its vehicles in California and Texas, and thanks to Elon Musk, automobile production in countries other than the US and China has seen a remarkable resurgence. Tesla has a respectable sales in Europe are increasing as a result of the cheaper costs, which are also helping Tesla expand its global market share. Given that Tesla lowered the pricing of its best-selling models, the Model Y and Model 3, in January, this trend is especially evident in Europe. Tesla's sales in Europe increased more quickly in February than those of any other automaker, according to new data from the NACE. In the European Union, 19,249 Tesla EVs were registered last month, up from 12,860 in February 2022. That comes in just short of Tesla's continuous gross objective of 50 growth. With Volkswagen's registrations expanding by 18 across all engine types, and Tesla's registrations accounting for 2.4% of the total vehicle market in Europe in February, up from 1.8% a year earlier, the company's almost 50 gross has greatly outpaced that of its competitors. What makes these markets ideal for Tesla's vehicles, and why are they beneficial for Tesla? Watch to learn how Norway is leading the way in the development of zero-emission automobiles and is a significant producer of gas and oil. 8 out of 10 individuals choosing completely electric cars over ICE is a significant step towards Norway attaining its climate goal of 100 battery electric vehicle sales by 2025, according to Secretary General Christina Boo. She went on to say that since addressing the climate risk is of the utmost importance, internal combustion engine unnecessary emissions is unacceptable. Russia has long been a significant producer of both natural gas and oil. It is currently the third largest exporter of natural gas worldwide and the largest producer of oil in Western Europe. Its annual glasshouse gas emissions in the 1990s were approximately 51.7 million tons, which is a major advantage for electric vehicle users in this nation, as well as others like China and the US. Green tax applies to the purchase, leasing, and ownership of EVs. Even without the EV subsidies that are offered in other nations, EV models are frequently more cheap than fossil fuel automobiles in Norway, thanks to the combination of these EV tax benefits and the hefty 25% tax on fossil fuel vehicles. To facilitate the switch to more environmentally friendly automobiles, Norway has also made significant investments in top-notch charging infrastructure. Based on Tesla's performance in these markets, the following analysis projects the performance of Tesla's stock in the future. Bush evaluation. While Tesla maintained its 50 yearly delivery gross target, Dan Ives said in a letter to clients that Musk provided a beatable delivery target this year in the 38 gross area, which he ultimately considers as a cautious figure, with the China demand picture materially improving. In addition, he kept his rating for Tesla shares at outperform. The oil price increased from 175 to 200 due to better demand trajectory and visibility. Analysis of music hall following the release of Tesla's earnings report. B.G. Rakesh kept his $250 price objective and buy recommendation. With so many companies in the electric car sector, he said, he thinks Tesla still leads the world in EV sales thanks to its vertical integration, higher profit margins, and self-driving technology. Analysis of RBC Capital Markets' Tom Narayan increased his target price of $223 for Tesla stock from $186. Early in March, he continued to receive an outperform rating. Jeffrey's examination with a buy recommendation. Philip Ochoa increased his target price for Tesla stock from $180 to $230. Although dynamic pricing could make it unstable, he noted that consistent product revisions could keep Tesla's Model 3 and Model Y growing across conventional segments. Despite all of this, there are still certain worries regarding Tesla, one of which is that the business may lose its Model 3 tax credit. Tesla recently revealed that, pending instructions from the U.S. Treasury Department regarding the sources of battery components, the $75,000 tax credit that has been in effect since January will be decreased for its Model 3 rear-wheel drive by March 31st. Additionally, the Treasury Department will be issuing guidelines for the procurement of EV batteries, which will affect which EVs are eligible for credit. For deliveries made prior to the publication of the revised advice, the credit is valid. On its website, Tesla announced that the $7,500 federal tax credit may soon be unavailable for the base Model 3. The business advised clients to accept delivery before the tax credit is predicted to be decreased in a letter they sent out. Do you believe the $7,500 tax credit for Tesla's Model 3 will be lost? Please share your thoughts with us below, and don't forget to share your Tesla valuation with us. Please click on the following video to see more about what Tesla has been up to in the previous few days.